Jules, good afternoon and welcome to the Africa Capital Markets Forum. It's great to have you with us. I think let's start with just an introduction of who you are and what you do.
Thank you. Good afternoon. Yeah, so I'm Jules Ngankam, the CEO of the African Guarantee Fund. We are based in Nairobi and we cover today 45 countries in Africa. So what we do is to bridge the SME financing gap. We all understand the importance of SME, in economy, in driving the GDP, in creating jobs. But those SME, to reach their full potential, they need to have access to finance. And that is one of the major constraints that they are facing in the African continent. So our goal is to provide guarantees and also deliver technical assistance to support those SME so that they can secure the credit, the financing that they need to grow.
All right, thank you so much for that introduction. I think let's just get into it. You and I have much to chat about today. So let's just talk about the Mission 300 Local Currency Guarantee Facility. It represents a $5 billion commitment to accelerate energy across Africa. What was the catalyst for launching this initiative now, and how does it fit into AGF's broader strategy?
Yeah, so I talked earlier about access to finance. This is at the level of the SME, but if you go down at the level of the population and even the SME, one of also the major challenges that we face is access to electricity. And the whole idea of Mission 300 was to make sure that 300 million Africans will have access to electricity by 20. For that to happen, we need to support the entire ecosystem, that lead to production, distribution of energy in Africa. And when we look at that ecosystem, we have a number of SMEs that are also involved that we need to support. It starts from sourcing the raw materials, because we tend to see like the end equipment that are needed, but those equipment, they are manufactured from some raw material. And in that sector, we have a lot of SME that are involved that need to have access to finance. Even now in manufacturing, once now they have the raw material, manufacturing the equipment, because to manage the issue of local currency, we need to manufacture those equipment also in Africa rather than just buying from Europe, from the US. In that case, that it's a way to manage the issue about the local currency. And then we have also some SME that are involved in installing, those equipment, running the equipment, producing energy, distribution. And again, they are facing the same challenge that I talked about earlier, access to finance. And when it comes to that specific sector, the challenge is even tougher. Why? Because, information, the banks to lend to those type of SMEs, because we are here today for capital market. We work with commercial banks to mobilize long-term resources in the capital market so that now they can lend to those SMEs. But information is limited. Banks, they need to understand the type of risk that they are taking. And because those projects, they are kind of new, we don't have a long kind of history of data. We don't have history on cash record. So that poses a problem, for banks. We have the collateral, which is also a big one. Bank requirement in terms of collateral is tough. So when they see the SME in that sector, what they want to see is that the equipment that they are financing, can that be used as a form of collateral? But the challenge that now we see is maintenance. How are those equipment maintained? Do we have the know-how? Do we have the expertise to maintain properly those equipment so that in case of a default, the bank can always use that to be able to recover? The second aspect is the secondary market. Is there a market where the bank can easily sell this type of equipment, in the secondary market? So these are the type of challenges that we see around collateral. And then we have the tenor. The tenor is also a big one because those SME, they need long-term finance. And most of the time, the bank can only do short-term financing. So how do we bridge that mismatch? This is when we support commercial banks to mobilize long-term resources in the market by issuing bonds. And then as AGF now, we provide credit enhancement, for such bond issuance so that now they can lend to the SMEs in the energy sector.
Thank you for that. And if we talk currency, Currency risk rather has long been a major barrier to infrastructure financing in Africa. Can you walk us through how this local currency guarantee mechanism works and why it's a game changer for energy projects?
It's a game changer because it allows commercial banks to raise long-term resources in the local market at a cheaper cost. Because why do banks, let's say lenders, tend to go for hard currency? Because it's cheaper. When you look at the interest rate today on a lending, let's say in dollars, a dollar lending, a euro lending is way lower compared to a loan in local currency, like Nigeria, in Naira, in Kenya, shilling. Yeah, so the major aspect is because they want to take advantage of that low rate. But now, if we are able to provide credit enhancement, we can also reduce the interest rate of lending in local currency. And that's what is a game changer. And the second aspect is that we tend to borrow in hard currency to acquire equipment that are sold from external manufacturers. If we can manufacture that also in the continent, that also can help to avoid this mismatch, this currency mismatch. And how do we manufacture those equipment in the continent? By supporting the SME, those SME that are involved in that industry, right? So being able to provide local currency solution will definitely be a game changer in terms of cost and in terms of expertise, in terms of technology.
Mm-hmm. And perhaps we should get into the scale and impact. You're targeting the provision of electricity to 300 million Africans. What does the pathway to achieving this look like, and what timelines are we working with?
So the timeline is 2030. So we want to make sure that 300 million Africans have access to electricity by 2030. And in doing that, we have to mobilize $5 billion of financing towards the SME in that space. And if they are able to mobilize such amount of money, we are very confident that we'll be able to connect 300 million Africans, to electricity by 2030.
Okay. And now the initiative involves collaboration with development finance institutions, commercial banks, and energy companies. How are you orchestrating these diverse stakeholders, and what role does each play?
Yeah, so collaboration is key. Partnership is key. So as AGF, I tend to say that we are like the bridge between the private sector and the public sector. You see, so if you look at AGF shareholders, these are GFI, Development Financial Institutions. So we mobilize concessional funding from the GFI so that we can leverage to unlock private capital to the SMEs or to any other player in that space. And the key thing there is the leverage that we can achieve, which is minimum 10 times. For every dollars of concessional funding that we can get from the GFI, we are able to unlock $10 of private capital from the commercial players to the SMEs.
Mm-hmm. And what specific risks are you guaranteeing against, and how do you balance making projects bankable while maintaining AGF's own financial stability?
So in terms, the major risk that we cover is the credit risk. Because the bank, when they assess a project, they want to understand what is the probability of default. Mm-hmm. Yeah, so this is the major risk that we are trying to cover. Mm-hmm. But the main challenge in Africa is also the gap between the real risk and the perceived risk. The real risk is at this level, but we always perceive it as being higher. And this is where guarantee can play a huge role, to show to the lenders, to the commercial bank that the risk, in fact, is not that high. But in order to get there, we need to give them enough comfort, so that they are so that they are fine in taking such risk, or increasing their exposure in such sector.
Okay. And Perhaps let's look at what criteria will determine which energy projects receive guarantee support. Are you focusing on specific technologies, solar, wind, hydro, or geographic regions?
Yes, we look at all these criteria, but ultimately we have two major criteria. The first one is the risk criteria, and the second one is the impact criteria. How risky is the project? And in doing that, we look at the country risk, the sector risk, the lender risk, the borrower risk, the transaction risk. A lot of risk score that we compute to get a better understanding of the risk that you are taking. But the impact also is very important, because if a project is very low risk but also very low impact, we are not interested in such products. So we will rather go to a product that is medium to high risk but with very high impact. Yeah, so we look at those two criteria. How impactful is the project in reaching ultimately the 300 million African, and also how risky is the project? And then we try to achieve a good balance between those two criteria.
Let's look at the energy sector regulations. They vary dramatically across African countries. How do you navigate this complexity? And are there policy reforms you're advocating for?
Yeah, a lot of efforts have been conducted by different governments in Africa. A lot of policymakers when it comes to regulation, and even some regulator, the central bank, they've done a lot of advancement, in understanding how important is, let's say, the climate risk as part of the overall risk within the financial system. Because the role of the regulator is to make sure that the financial system is stable. But stability can also be driven by climate risk, what we've seen across the continent. So we discuss on a regular basis with policymakers, with regulators, and then by advocating what can be done, by sharing some ideas in order to improve, again, access to finance, and making sure that we achieve the impact that we are intending.
And I'll just go back a little bit. How much private capital do you expect this $5 billion in guarantees to unlock, and what's your strategy for attracting commercial investors who've traditionally been hesitant about African energy infrastructure?
Yeah, this is what we are doing already. AGF, so far we have already unlocked $5 billion of private capital across the continent.
Yeah.
And then we want to do $5 more billion for the energy sector. So the instrument that we provide address the main challenge of those investors. Risk is one of the challenge. The cost is very costly, is one of the challenge. The expertise is one of the challenge. Liquidity, yes. So with our instrument, we tackle all the specific issues that those potential investors face as they are taking more exposure, in Africa. And we also have African investors taking that are taking those exposure in Africa. Yeah, so overall, what I will say is that we have a proven business model. We have already unlocked $6 billion of financing across the continent, and we are looking to do more by leveraging already in the expertise that we have built in a network of banks. Today, we work with more than 250 financial institutions across the continent, to unlock private capital to the energy sector.
And with African banks, they often lack the capacity or appetite for long-term energy project financing. How is this facility designed to strengthen how is it designed to strengthen local financial markets? I beg your pardon.
Yeah, let's go back to what I said earlier. You say the banks, they don't want to go to this sector. Why? What are the reasons? I mentioned earlier, collateral, information, the tenor, you see, so the currency. And the facility is designed to tackle those gaps. Mention the issue of collateral. There is no secondary market. We may have some limitation in terms of maintenance, meaning those equipment that those SME are acquiring has a very low collateral value in case of a default, right? Talk about the tenor. We need to give more comfort to those investors to mobilize long-term resources in the market. So expertise also, the skill gap.
Yes.
We need to make sure that those SME in those sectors, maybe they understand how they produce this type of clean energy, but how about other skills that they need, like the legal skills, the marketing skills, the financial skills. This is also where we do provide technical assistance. Yeah, so our product are packaged to address those specific gaps that will give more comfort to potential investors.
Mm-hmm. And the energy regulator sector's regulations, they vary dramatically across African countries. How do you navigate this complexity?
I think we need to be agile. You cannot have like a clear solution on how you navigate through the complexities. To be agile, we talk about the regulation. You have also the regulatory environment can change very fast, and the fact that even when we talk about the regulatory environment, what are we talking about? Mm-hmm. The continent is very fragmented. Yeah. We have 54 countries. We have more than 40 currencies, meaning we have more than 40 regulatory regime across the continent. So you have a regulatory framework. Let's say in South Africa, you just move to Malawi, it's a different framework. You go to Kenya, to Cote d'Ivoire, to Senegal, to any other country. These are different frameworks. So we need to be very agile to be able to navigate across these different regulatory regime. That will be the same for currency. We need to be agile. That will be the same even for the accounting rule. When we work with different companies, different SMEs, different financial partners across the continent, their financial statement sometimes follow different accounting rules. We need also to be able to navigate, the legal framework. So agility is key at this level.
Yeah. And financial guarantees solve one piece of the puzzle. What other barriers to energy access need to be addressed for Mission 300 to succeed?
Yeah, so when you look at the challenge, they are quite huge. As you say, financial guarantee is just one piece of the entire puzzle, but the other pieces are mainly the reforms, the policymaker, the regulatory kind of reforms or requirement. Yeah, so meaning we need to work also closely with the policymakers, with the regulators.
And ever since AGF's inception, what have been your most important learnings about what works in de-risking investments in Africa, and how are you applying those lessons to this initiative?
Yeah, so I think what works based on our experience is that the product that the banks are offering needs to be aligned to the need of the SMEs. Aligned to their business cycle, aligned to their needs in terms of the tenor of the project, and also aligned to the specificity of the local environment when it comes to the legal framework, to the regulatory framework. So again, it goes back again to this agility, but the product that are offered need to be adapted to the specific needs of every SME in every sector, in every country, in every jurisdiction.
And beyond the 300 million beneficiaries target, what other KPIs will you use to measure success, and how will you track both financial performance and development impact?
Yes, so we want 300 million Africans to have access to electricity, but in addition to that, we are going to track job creation, because when you have access to electricity, when you see the ripple effect, like today in Africa, we have a lot of small businesses. They need to have access to electricity to run their business. You see, so like maybe they are in the tailor business, maybe they run a small restaurant, so they need to refrigerate food. Yeah. So the ripple effect is in terms of job creation and revenue generation. So thanks to this access, what additional jobs have been created by what additional revenue those businesses have generated.
And if Mission 300 succeeds, could this model be adapted for other critical infrastructure needs across Africa? Water, transportation, and digital infrastructure?
Yes, that's the goal. The goal is to be able to replicate that to every other sector in Africa where we have needs, and the needs, they are in every sector, in agriculture, in transportation. Yeah, so the idea is to test this model, and we have already tested it anyway. We know it works. Now it's mainly achieving scale to be able to replicate that in other sectors.
Yes. And how does this initiative align with Africa's climate commitments and the continent's unique position as both highly vulnerable to climate change and needing rapid development?
Almost the last question. Yeah. So, please ask again. What is that again?
All right. So basically, how does this initiative align with Africa's climate commitment and the continent's unique position as both highly vulnerable to climate change and needing rapid development?
Yeah, so when we look at the Mission 300, it's mainly about renewable energy, right? So we need to make sure that we move with transition, we impact the green transition. And this is how we align now with the climate impact initiative across the continent.
Yeah. And lastly, Jules, 5 years from now, what does success look like for this facility? And how will it have transformed Africa's landscape, energy landscape?
5 years from now, we're in 2030. We get to our 300 million African connected to electricity. So that's the goal.
Yeah.
Yes.
All right. Thank you so much, Jules, for your time, for joining us on the Africa Capital Markets Forum.
Thank you very much.
It was great talking to you.
It was a pleasure. Thank you.